The fear index is at 21, but Bitcoin is holding $90,000.
Wait, extreme fear while the price is strong? That sounds like a major contradiction.
It's not a contradiction, it's an edge. This exact disconnect precedes explosive moves.
Okay, so what's driving the market with that setup in the background?
4 key headlines. The fear index disconnect. DeFi lending hitting $41 billion. U.S. regulators just flipped bullish, and an AAVE governance crisis is erupting.
Let's start with that fear. Why are people terrified at $90,000 Bitcoin?
It's the holiday week. Traders expect dead liquidity, but they're missing the bigger picture.
Which is what? What are they missing?
Markets that climb a wall of worry produce the strongest rallies. Smart money is accumulating now.
Because retail investors are paralyzed by the fear signal, so the big players have less competition.
Exactly. When sentiment finally catches up, that pent-up retail demand creates explosive momentum.
And you mentioned the fundamentals got a boost from regulators.
A massive one. U.S. banks are now cleared for crypto custody and transactions. Plus, the CFTC launched spot crypto products and a tokenized collateral pilot program.
That's huge. These are the barriers that have blocked billions in institutional capital.
Correct. Mark your calendar for Q1 2026. That's when the institutional floodgates truly open.
Okay, so what about DeFi lending hitting a $41 billion all-time high?
It's a structural capital rotation. Real capital is being deployed on-chain for yield.
What's fueling that surge so aggressively?
Relaxed risk parameters, points farming programs, and a race for liquidity on cheap Layer 2s. This validates that institutional-grade capital now sees DeFi as operationally viable.
But you said there's a crisis at AAVE that threatens this whole thesis. What happened?
A 10% token crash after a controversial vote was pushed. A $50 million whale sell-off amplified it.
Why does one protocol's drama matter so much to everyone else?
Because this December 26th vote sets a precedent for power across all of DeFi. It's a stress test for whether founders or token holders have the real control.
So the outcome could change how investors evaluate risk for every governance token. Got it.
Right. A few other quick updates. The Ethereum Fusaka upgrade just slashed Layer 2 fees by up to 90%.
That makes so many more apps sustainable. A huge win for adoption.
Also, privacy tokens are breaking out. zkPass surged over 57% on its mainnet launch. And watch out for token unlocks. $830 million in supply pressure is hitting specific assets.
So much is happening at once. The market is moving incredibly quickly.
That's the key takeaway. Fear is in the headlines, but the structural fundamentals are strengthening.
This is all moving so fast. How can people possibly keep up with these critical shifts?
That's why we deliver updates every 12 hours. Subscribe and like so you stay ahead of every move.
12 hours. That's a serious advantage when things change this fast.
Markets move fast. We move faster. We'll have fresh intel for you in the next update. Stay sharp.